Bitcoin is surging, the Fed is printing trillions, and inflation is nowhere to be seen. 2020, you can't end soon enough. In this episode, we're going to get into what's going on with inflation and what our outlook for it is in 2021. Let's get into it. Hello, my fellow YouTubers, and welcome to PapayaCast, the channel where you get the information you need today to prepare for the economy of tomorrow. Right now, we're living in a very interesting time. We're seeing the value of the dollar trending lower. Currency alternatives like Bitcoin and gold and silver have done very well this year. The Federal Reserve is printing trillions of dollars at an unprecedented pace, and yet inflation is extremely tame. When I take a look at how Bitcoin has done this year, I get a slightly uneasy feeling in my stomach sometimes. It looks like a pure bubble if you just look at the graph. The trajectory lately has been straight up. And while the latest performance may be a bit frothy, there are some solid fundamentals behind the latest movement. It's an interesting asset in that it has a limited supply similar to gold. You can't print more of it. But yet it is backed by nothing more than faith in the value of the currency, just like the dollar. As the dollar has been trending lower, we've seen alternatives like gold and silver gaining momentum this year. Bitcoin has begun to do very well as it has gained some legitimacy lately. Big institutions are treating it more seriously now. PayPal is going to be integrating cryptocurrencies like Bitcoin into their transaction capabilities. And Square has done this as well and even bought some for themselves as an investment. We are also seeing big investors getting involved. So Bitcoin seems to be developing into a serious contender for an alternative currency and store of value.
Hey, if you like what you're seeing so far, give this video a thumbs up to keep us in business. Now let's get back to the video.
Let's take a look at just how the dollar has been doing this year. The trade-weighted dollar index is approaching the lows it hit in 2017 and 2018, but from a historical perspective is not in imminent danger territory yet. At this point, it's more about the trend of the dollar amidst the backdrop of an economic recession and massive government stimulus efforts that is a bit concerning. Compared to other indicators, it has done quite poorly. Since March 23rd, when the stock market hit bottom, the dollar has fallen 12.3% through December 22nd. In contrast, gold, a longtime favorite for a hedge against the falling dollar, has risen by 19.1% over the same time period. The S&P 500, which has fully recovered from the March lows, has gained 64.8%. Silver, another hedge against the falling dollar, has done even better. It's up 92.3%. But Bitcoin definitely takes the cake. From March 23rd through December 22nd, it is up over 270%. That is a mind-blowing increase in such a short time. So why are we seeing all this happen? Why are people so worried about the dollar and piling money into these alternatives? Well, this right here is a big reason. Here's a graph of our money supply. The Federal Reserve has been busy and has added trillions to the M2 money stock itself, up over 19% since March 23rd, about the same amount as the spot price of gold. With all of the action in these indicators, you would think we might have an issue with inflation, right? But that is just not the case at all. Here's a graph of the year-over-year growth in the price index for personal consumption expenditures, which is the Federal Reserve's preferred measure of inflation. Inflation is barely in sight, coming in at just 1.1% in November, significantly lower than the Federal Reserve's target of 2%. So what gives? Basic economic theory tells us that if you print money, it should lead to inflation. And the Fed has increased the money supply roughly 20% this year. The big culprit here is this: the velocity of money. The velocity of money is essentially a measure of how many transactions a dollar goes through in the economy in a given time. The more transactions from the same dollar, the higher the velocity of money. The velocity of money has been trending lower for a few decades now. This means that as the Fed keeps printing, each new dollar is having less and less impact on growth, or changing hands less frequently, which for now is keeping inflation in check. Answering the why this is taking place is actually part of a larger research project that we are currently working on, and we'll be updating you in future episodes. For now, the outlook on inflation over the next few months is good, given current trends and that low velocity of money. That's the indicator that you're going to have to look out for changing in the coming months. Look out for our next video this week where we will present our forecast for fourth quarter GDP growth and give you a heads up on the economy's direction a full month before the government releases its official estimate. I hope you found this episode useful. If so, please give it a thumbs up, share it with everyone you know, and I hope you will consider subscribing to this channel so that we can continue to deliver you more valuable insights about the economy and how it will impact your life. If you didn't find it useful, go ahead and give it a thumbs down and let us know in the comment section below that this was a terrible presentation and that you would be better off getting financial advice from a trained monkey that charts stock movements for a regular supply of bananas. Either way, I'll see you in the next video.